Hello and welcome to this short FlexUp presentation and demo. So what is FlexUp? FlexUp provides you with a simple way to start, structure, and grow your business. It's a platform and ecosystem containing four core pillars. First is an innovative economic model, which is then built using a very solid and comprehensive legal framework. All of that is managed with a very simple but powerful business management app, and all kinds of support and services can be provided via our network of partners. All of that in a consistent ecosystem. So just in a nutshell, this is a new way for businesses with a focus on startup and small businesses to manage their business and operation. The main objective is to simplify your life, ensure fair and effective collaboration between all the stakeholders. Ultimately, the core objective is to help you generate more wealth and make sure that this wealth is distributed in an equitable way. So what is the problem that we're trying to fix? First of all, is that building a business is very hard. There's a lot of complexity. You need to learn about a lot of very complex administrative, legal, and financial issues. You often have to reinvent the wheel with bylaws and contracts and partnerships. The current economic model also creates structural barriers and structural conflicts of financial interest because there is a discrimination between different types of stakeholders. Basically, if you're a founder, an investor, an employee, or a supplier, the type of deals that you're getting are quite different. Each of these deals need to be designed, discussed, negotiated, drafted, and ultimately create different incentives for different stakeholders. So what we're providing is a solution. It's a very simple solution. We create a new economic model where the interests of all the stakeholders are aligned. They're structurally aligned because everybody is remunerated using the same mechanism, the same payment systems. We have a unified, standardized legal framework that allows this to be implemented in any country, any jurisdiction. And this means you don't have to reinvent the wheel. You don't need to spend money and time designing and negotiating contracts and frameworks and paying lawyers and all kind of other expenses. You can just use a standardized framework, and all of that can be generated automatically via the app, and all the bookkeeping is done through the app. So the objective is to increase collaboration, simplify, provide more transparency, ultimately generate more trust, and encourage collaboration to generate more wealth. So what is the new FlexUp economic model? So just to simplify, in the current system, a business first has to pay its employees. And then after that, it must pay the state, the taxes, it must pay its suppliers, it must pay the bank, whatever loan it has. And any cash that remains at the end belongs to the shareholders. And if the shareholders or if the business is not able to pay the employees, the state, the suppliers, or the bank, the business will be in default and risk bankruptcy. So essentially, employees, state, suppliers, and banks, they don't bear any risk, or at least they bear very little risk. And the shareholders, they bear all the risks and they take all the profits. Now, this system works, of course. I mean, the global economy works like this. It works very well in most cases, but structurally, there is a conflict of interest between these stakeholders, and this can lead to problems. Plus, there is a very fixed and rigid cost structure, meaning that if you don't have enough money to pay any of these stakeholders, you risk bankruptcy, which can be tough when you're starting your business and you don't have strong cash flow yet, or if you're going through a difficult period and suddenly you don't have enough cash to pay everybody. So FlexUp proposes a completely different approach, which is based on the principle of non-discrimination. Basically, there is no difference between labor and capital. There's no difference between an employee, a founder, a bank, a supplier, a shareholder, a client. Everybody is treated using the same system with a very simple cash waterfall where everyone can choose how much risk they want to take. Basically, they split their remuneration between different priority levels. To make it simple, you can choose to be paid with a firm priority, a flex priority, or equity priority, which comprises credits and tokens. So you can think of credits like a type of loan and tokens like some kind of shares. Okay. Now, anybody can split their remuneration between these different priority levels. That's what we call the payment structure. So I can say I want to be paid 30% firm, 50% flex, and 20% credits. And because I'm taking some risk on the flex and the credits, then I'm receiving some tokens, which are a measure of how much risk and how much contribution I provided and how much risk I took on that contribution. That's the FlexUp economic model. So let's look at a very simple case study, which we call Orbital. So it's basically a startup with two founders, Giorgio and Roberto. They're incubated in Milano with an incubator called Nova Labs. Now, Giorgio and Roberto, they're both going to develop a new product, a new technological product. They both expect a remuneration of 5,000 euros per month. But of course, initially there's no cash, so nobody's going to pay that. So Giorgio doesn't need cash right now, so he's going to pay himself on a 100% credit basis. That means that the project that they create together is going to award him 5,000 euros of new credits every month. Now, Roberto, he has the same background, same, let's say, experience. And so he's got the same basic remuneration, 5,000 euros per month. But he needs a bit of cash to live. So he expects to get 30% of his remuneration using this flex mechanism, which means flex. As long as they're cash, you're being paid every month. Otherwise, it goes into your credits. Okay. So he's taking less risk, but he's still taking some risk on the flex because when cash runs out, he doesn't get his flex paid. And he's putting most of his remuneration as credits. Now, Nova Lab is an incubator in Milano that uses the FlexUp system. They provide two things. They provide a bit of funding and some lab space. So the funding is it's 10,000 euros paid upfront. And the lab space is where they can do their work, right? And it's 1,000 euros per month. And the incubator is being paid 100% in credits. But they're using redeemable tokens. So that means that the founders have the option to buy back the equity of the Nova Labs, provided that they pay them back basically twice their money plus 25% per year interest. That's kind of the standard deal if you have redeemable tokens. So the way it is going to work is that initially the company valuation is based on the sum of the equity that has been invested. So that's what we call the cost plus risk based valuation, as opposed to a future looking, market expected value, which is very hypothetical. And that's why they are diluting themselves very fast early, because the Nova Lab is investing at a cost-based valuation, but they have the option to buy them out at some later stage if they're profitable. So let's look at the demo app. We have a demo environment where you can see this in real live in the app. You can just log in using orbital@example.com. That's the email, and password is demo. Okay, so we're now going to look at this case study in the app, in the demo environment. So you just click on this link, demo.flexup.app, and you log in using these credentials, orbital@example.com, password is demo. So you can see here, we're in the demo environment where we create a lot of different case studies that you can look at. If you want to look at some other demos, other case studies, you just go on our blog, case studies, and you see that we have several case studies, and each of them have their own password that you can log into. So for Orbital, we just type orbital@example.com, log in using the password demo. And you can see here that we're in the demo environment. We're in the demo account, Orbital demo account. This is the user. It's a user we created just to be able to view this demo. So you are a viewer. You cannot edit anything. You can just view it. And you see we have different accounts. So Orbital, this is the account where the project sits. This is the project account. You can see it's a sub account, and you can look at the details. So this is a sub account that's currently being incubated, being held by the Nova Labs incubator. And you can see that we have several members. We have Giorgio and Roberto. We have the incubator CEO who has access to this account. And so these are the members. These are the users who can actually view and edit the information in this account. Now let's look at the third parties. These are the different accounts that Orbital is doing business with. So we have the two co-founders, where you can see that so far there's been 3 orders, 3 months. Each order is each order is 1 month. You can see 5,000 euros for each of these months. We also have some general expenses, and we have the Nova Labs with the investment account. You can see the contracts. So you can see, for example, in the case of Roberto, that he has a contract with 3 orders of 5,000 euros each. And the payment structure is 30% firm and 70% flex. Actually, it should be 30% preferred, but that's fine, or flex. You can look at the equity structure, and you can see that on the, let's say on the 25th, on the 1st of April 2025, the project just started. On the 1st of May, we had a first order that came in. So Novalab invested 10,000 euros. Giorgio invested 5,000 euros of credits, and Roberto invested 3,500 euros of user remuneration as credits. And the 1,500 of flex was actually paid by the Nova Labs. And you see that the token increases by 25% per year. Initially, it was 10 euros. So if we're looking at the project now, let's say after 3 months were invested, let's say after 3 months, so that would be the equity structure. So Giorgio has invested 3 times 5,000 euros, Roberto 3 times 3,500, and Nova Labs an initial 10,000 euros. So now I just logged out of the demo user, and I just logged back in as Lorenzo. So Lorenzo is the CEO of the Nova Labs incubator, and he's also an administrator of the Orbital account. Now we're going to see the example where Nova Labs is also adding some lab rental. So they're going to create a new product called lab rental. So let's assume that this is 1,000 euros, and for the sake of the example, let's assume there's no VAT. So this is the product that we have, and let's assume that we now are going to sell this product. We're going to create a contract with Orbital where Orbital can basically rent the lab for 1,000 euros per month using the credit payment system. So you go here, payment term, you create new payment term, and you can select one of the existing system payment terms. We made it easy. You can just select the ones that you want. So we said that they're going to be paid using redeemable credits with redeemable tokens. That means that the founders have the option to buy back these credits at a later stage. Okay. So I've just added this new payment term, and let me see if I can see it in the payment structure. Yes, I now have the option to pay something with 100% credit. Now, the difference with the payment term and the payment structure is that in a payment structure, you can create a complex payment structure. For example, you could say 30% firm plus 70% credit redeemable tokens. Right? You have this option, and then you would just, this is a commercial contract using flexible payment terms. Then you would have 30% firm, let's say standard. Yeah, of course, you can explore to see what standard means exactly, but in this case, we're going to keep it simple. These are my payment terms. These are other system payment terms. So I already created this one. I added to my list. So that's my payment structure. You can see the name is generated automatically. This is just your nickname. And you can see the risk factor. This is 100% risk, but this is 30% risk because the firm is considered to have zero risk. So we create this way of calculating risk based on the payment terms, and that determines how many tokens you get. So now let's create this new contract where the client is Orbital and the supplier is the Nova Labs. And it's going to be a rental contract. And this contract is going to be subject to the FlexUp charter. Now, I haven't discussed this yet, but basically, when you create a new project and you want to use the FlexUp economic model to be able to pay your partners with flexible remuneration, including equity or flex, you need to create a charter. Okay, and we already created a charter in the Orbital account. I'm going to show you that in a minute. This is going to be a monthly recurring contract because every month is a new order. And let's just say that this was done at the same time as a project start, which, if I remember correctly, was 1st of April. Notice that we put the dates backwards so that there's no confusion between American and European style of writing dates. So year, month, and date. What product are we selling? We're selling a single product, which is this lab rental. And the payment structure, we're going to have a single payment structure, and it's going to be 100% credits. And let's create this recurring. Let's create our first order. Yes. So when will this contract, this first order? Well, the first order was same. The first order. Now, what I need to provide in an order, it's the delivery start and the delivery finish. The delivery finish, it's basically for which period is this order applicable to, right? So the first order is for the month of April 2025. The payment structure has been automatically added for this order. And let's say this was sent on the same day, right? And now I have this order. You see the rental April 2025. So that was added automatically. And I'm gonna save this. Oh, this has been sent already. Okay. Oh no, I need to send the contract first. So we still are improving the UX. So bear with us. Progressively, this is going to be easier and easier to send. So I'm going to sign it. So sending a contract and signing it are two different activities, right? So remember that when you send it, it's not enough. You still need to sign it. And this one I'm going to send as well. So now let's go back to the Orbital. Now, since Lorenzo is also administrator of the Orbital account, Theoretically, he could just go here and sign it. Okay, but that would not be very, very transparent. So what we're going to do is we're going to sign in as Giorgio and accept and sign this contract from Giorgio's as Giorgio, the user, right? Okay, now you see I'm in Giorgio's account. So I've signed in as Giorgio, and Giorgio has access to the Orbital account. He's an editor, and he's also access to his personal account, right? And in his account, he has his service contract where he's providing his work as a co-founder, but as the editor of the Orbital account, he can see this contract that just came in from Nova Labs. He can just review the contract. And he can see all the details. He can see the payment structure. He can see the orders. So I quickly updated Giorgio's role. So now he's been upgraded to a manager. That means he can actually sign the contract because as an editor, he didn't have the right to sign it. So he can sign the contract. I'm going to keep that date just for, and he can go now and see the orders for rental. Now he can also confirm the order. So since we have automatic delivery, you can see here, when you confirm the order, you mean you also accept that the order has been not only you confirm and sign the order, but you actually agree and accept that it's been fully delivered. That means that, oh yes, so I've confirmed the order, but now Lorenzo, as a supplier, he also needs to confirm the order, right? You see here, rental. Okay, I was confused because why can't I confirm this order? Well, I'm still in the Orbital contract, right? So now I need to switch. And now I'm in the Nova Labs account. And as the supplier who has received the order from the client, I can confirm this order. So if I go now to the Orbital account, I should see that the equity table has changed. And you can see now it has 11,000 euros instead of 10,000 because the first order for the rental has been created. Okay, that's all for this short demo. The last thing I wanted to show here was the charter, where if you want to create a project and use a FlexUp economic model to pay your partners and stakeholders with equity, you need to sign a charter. And this is a short example where basically you just need to fill in the date, when did the project start. By default, you will have a token index starting at 10 euros, increasing by 25% per year. It's a bit like share price, but it works even if you don't have a company yet that has shares. However, if you intend to create a company in the future, you can by default say that the tokens will automatically convert to shares when there is a future share issue. That's an option that you can click when you create a new charter. That's all for now. And of course, I'm available to provide more detailed demonstration and help you set up your project and help you with the onboarding. Thank you so much. Bye bye. Good luck.